All right, great, cool. Well, thank you guys so much for coming on, giving up your time, lunchtime. I know everyone's busy and got lots on in their days. Everyone's trying to fit a 12 hours of work into 8 or 9. And I know that lunchtime is a very important time as well. So I appreciate you guys coming along to see what we've got in store and, understand our stock ahead, sort of how we operate and hopefully how we can do some great deals together this year, which we're really excited about. Some of the real estate we're working on, it's going to be great for a really broad range of buyers. And what we're trying to bring to the plate is, we're feeling a cut above and beyond sort of any other kind of other aggregation alliance partners that are out there in the market. So exciting to do some deals with all of you, but I'll kick into it. So this is the first one for the year. We'll do these monthly just to give updated insights because, every week some deals are changing in terms of what feeds we can kind of pay, in terms of rebates available, pricing, availability. So we'll try and do these monthly and always cover what we've got on the market and then what's coming up as well. So just to recap a little bit of an introduction about us, our services, what we can offer. Then I touch on the current opportunities and then what the first half of 2023 looks like today. And I'll reference throughout the course of it a bit of a theme of, we do get a lot of people asking for, I want complete or anything, something like that. But I want to sort of just reference throughout the course of the presentation today, just the benefits that we can see coming through to the market now with off the plan buying. So maybe a little bit more of a conversational strategic change with some of your clients. But who is part of the team with us today? You've got myself, Brennan Latimer, and Michael Mangano. I would have chatted with, signed up with many of you, and the same for Michael. So looking forward to doing some work with you guys for this year. But I'm the director and licensee of the group. And one of the partners with our combined group of companies as well. 13 years in the industry, specifically for me in residential investment real estate, investment portfolio of my own. We also do some boutique developments ourselves. So I've got some experience in site acquisitions and a bit of development management there as well. At the helm with me, Michael Mangano has been with us for years and years and years now. He sort of heads up looking after the groups across New South Wales, investment sales and education. He himself has benefited greatly from investing in real estate to get his PPR now in Sydney. So we can have very, very good conversations if you ever need help with him in terms of scripting and sitting down with clients and all that sort of stuff, which is what we're more than happy to do in terms of sheer consults and investment education as well. So experience with us, we've worked across deals from East Coast to West Coast, regional, everything in between, blue chips and more entry-level affordable real estate and all different property types as well. So well versed to be able to help out our partners in any way, shape or form. Just a bit about what we're looking to offer here. Obviously, it's about you guys getting some fantastic access to really, really good, well thought out deals to put in front of your clients and work on with your team. And that's what we're here to do. There's a lot of homogenous, ordinary real estate out there. And what we try and strive to work on is very well thought out, contextually driven projects that are going to do not only the right thing by your client, but also make your life very easy. So the way we want to see ourselves is we really want to be an extension of your businesses. So we know that right now, we all need to, in light of the current climate, be getting more from less. We need to spend more time with our clients, more nurturing there, which is where we can see a little bit of a loss of time in gophering around trying to get some deals. So huge opportunity to work with someone like us with a big team, contracts managers, teams of acquisitions agents, purely just working around negotiating deals, to benchmark off that as a extension of your business so that you can focus on the clients. Stock's taken care of, and you can give that A-grade service to your clients so that they can keep coming back. So we've got acquisitions teams now out there, team of 3-4 people working across select markets, working with developers, working with builders, negotiating, getting deals assessed, all due diligence lined up. Contracts managers are there, minimum of 5 years for any individual in our contracts management team, legal trained as well. So they're there to work alongside us and yourself during the contracts process once the sales is made, to make sure between the sale and the developer, there is an absolute continuity of communication and sales can be really, really well streamlined. Acquisitions process, it takes up to 3 months before anything of ours actually hits the market, which can be site site meetings, developer meetings, going back and forth and doing checks, with ASIC on people's backgrounds, understanding what their finances look like, the sheer due diligence of rentals and sales, contracts review. We go back and forth for a long time, making sure contracts are actually pre-negotiated and iron out any really curly terms that are not in favor of the buyers before we put up the deals and get them launched to our network as well. We've got a full in-house accounts department as well. So they are constantly, as soon as contracts are exchanged, invoicing and chasing up on a weekly basis, which I know is one of the pains in everyone's businesses in terms of cash flow and velocity of getting paid. So we've got a full team there chasing to ensure that we can get everyone paid as soon as practically possible. And one great addition as well is you want to make sure that your clients are looked after. You sell them a property in Melbourne, you sell them a property in Brisbane. You want to make sure that there's also an extended team to be able to help them out with the property management. Because as we know, a lot of people will, go and buy a property in some market up in Queensland with ABC Group, and then they get to settlement, and a lot of people are just left in the lurch. Hey, now what do I do? 2 weeks have gone since I got handover. What am I doing? I'll talk to a property manager. Good luck to you. So what we've got is we've actually got 500 rents under management, an extensive portfolio in Melbourne, and 500 under management in Brisbane as well, with an extensive team that know, the crux of the market, ins and outs, and how to get the best results for investor clients as well. So you can, with confidence, utilize our property management team as well. And our guys will always get started in the lead up to settlement so we can get tenants in there as fast as possible. And they're well versed on the deals, the rents and timeframes and everything in between. So it's all sort of in-house. Now, we're working on deals outside of Brisbane and Melbourne, Newcastle maybe, or ACT. We've been doing work there for over a decade. So we've got select property managers that we've got extensive referral relationships with that we're very comfortable to be able to recommend for you guys to use as well. So all in all, we've packaged up a one-stop shop in-house opportunity here for you guys. As I said, really looking to have it as an extension of your business. I've already touched on this sort of stuff, but our deals, extensive market assessment, every single one of our deals, unless it's like maybe just a completely ad hoc one piece or two piece sort of situation that we've worked on with you, they'll have an extensive property investment report available, which is 20, 30, 40 pages of market research, micro, macro analysis, everything to rental appraisals, cash flow analysis, everything in between, so that you can sit down with confidence and actually go through the deal with a client. They are white labeled as well, so that there's no crossover of brands. You can freely use those property investment reports as much as you like. We're also doing now per listing, we'll actually do the acquisitions. We'll do a non-branded 10, 15 minute video, which would be great to train yourself. Watch that, you train your team. It'll actually also be client friendly as well, to be able to put in front of clients and for watching a bit of educational context about the deals as well. Then we've of course got white label expression of interest forms for you guys as well. So basically, as I'm talking about, that extension of your business is all packaged up and available, so you can have a report, sit down with a client, know the context of the deal, the ins and outs, give them a property report that's not branded. If you want to, we can get a property report. If you really want to get stuck into a particular deal, we can get a property report branded for you, your brand as well, if you like as well. But yeah, so some really good tools for you guys to use. So without further ado, I'll jump into the projects, and starting with, still seems to be a market favorite, the Queensland market. Now, a lot of people are definitely interested in complete or nearing completion. And where it's possible, we'll always be hunting it down and trying to list it. There are some pitfalls with completed and nearing completion at the moment in terms of prices being, quite high relative to at the moment, we've got a pretty subdued market with a real lack of actual sales happening in the market because of what's going on. So comp sales right now are sometimes not the best. So sometimes the complete or nearing completion real estate can fall short and be a little bit more challenging. But where we see some great potential, we will list it and work on it. So starting with this one, many of you might know Lutwyche. It's a great, emerging suburb, 4Ks directly north of Brisbane CBD. We've got a really, really quality offering here, suitable to owner occupiers, but I love the investment metrics of this one as well. Boutique complex of 36 apartments. Very, very high standard of finishes, 2.7 ceilings, wooden flooring, great appliances and everything like that. Rooftop amenity. What I love about this one is the fact that it's actually got a really nice little gym and a nice rooftop pool, which, as you guys may know, because of costs of building, rooftop amenity is going to start becoming almost obsolete for complexes that are not really quite large, because of the economies of scale. In a small complex, they won't be able to make it work. So where we can get these kinds of complexes this size that have this amenity and this price, it's a really, really, really attractive offering to, that's going to put your client in a very good spot in the future for that owner occupier sale. So we've got just 2 3-bedrooms here. We're working with this developer on this one, and one coming up of theirs in Tenerife as well. Very experienced builder developer situation, so some great efficiencies with the builder developer combo. But 2 3-bedrooms properties, people who can't complete, 845 to 860,000. That's over 110 square meters internal, plus balcony, plus 2 car spaces, plus storage. And really good. What we're seeing there, our rental managers say that if these don't rent for 750 in the market today, they would be shocked. So give it another 5 months or so when you're actually settling these properties, you're going to be looking at a pretty good rental return, we feel. So to be able to get like owner occupier, pretty blue chip kind of real estate 3-bedrooms and get a 4.5% rental return is really, really impressive. And it's going to help buyers be able to actually support the funding for purchasing it as well. Every other kind of metric we want to see is there for our listings. We've got 0.6% vacancy rates. We've got absolutely stifled supply in this market moving forward. It's really an infill location now, maybe a few more little complexes to come. That's it. It's going through its gentrification and change quite rapidly. And the owner occupier sales, I think 95% of this complex is owner occupier sales to date as well. So great nearing completion example, close to parks, a short walk to Woolworths, Coles, eateries, and the Lutwyche main arterial bus transit stop as well, which gets you into the city really, really quick too. So great location. You can comfortably sit down with clients and show them this. And what I love about this is last year, there was actually some quite premium brand new projects in Lutwyche that blew my socks off. That there was stuff settling last year, 3-bedrooms, a little bit bigger, but $1.2 million in Lutwyche settlements last year in some great complexes. So really good benchmarking to see where we sit at 845 to 860 for some 130 square meter 3-bedroom double car apartments in that suburb. So a great product for a long-term hold. Moving on, sticking with the complete or near complete theme, with one of our main developers, Cavcorp, many of you might be aware of, probably one of the top developers in terms of quality and brand coming out of Brisbane. Mr. Damien Cavalucci pretty much owns the north side. Love doing work with him. We've made clients on his projects a lot of money over the years. And he's got a number of apartments he held back in his project Luminaire, which is now completed. So this sits right in the heart of the Gasworks precincts, which many of you might know. It's been around for years and years, going through this rapid gentrification. And the demographic shift that's gone on there is like nothing I've seen anywhere. I was up in Brisbane. I'm based in Sydney. I was up in Brisbane last month for a week. Spent a bit of time around that pocket doing a bit of wining and dining with some friends. And the change that's gone on there, I can tell you it's better than Sydney hanging around Double Bay or anything else like that. It's really amazing to see what's happened there. This affluent demographic that's come into town and the rents they're paying and everything like that. It's really amazing. So when we send clients up there, they buy. So if you do want to check this one out, it's definitely something we can organize a bit of a tour for you as well. So it's brand new, complete, ready to settle. You can see some of the price ranges there. So a good range of pricing. Basically anything new coming to the market in Newstead or Tenerife is from $15,000 a meter in the market today. So we've got some really good pricing and kind of like $13,000 to $15,000 a square meter here, but in a complex that is just absolutely world class, rooftop amenity and everything like that. And the story of where it sits and the health and well-being precinct that it is, with new gyms opening up in this whole precinct in the piazza that's coming through is just mind-blowing. So I encourage you to check it out. But they're actually, the really cool thing here is they're actually getting like $1,300 a week for those 2-bedroom, 2-bathroom, 1 and 2 car multi-purpose room apartments. So really crazy to see. So yeah, take advantage of the developer. He held back a couple of dozen apartments to, get a little bit more yield for his project. Definitely, these were less expensive when sold off the plan 2.5, 3 years ago. But there's still some really good quality blue chip buying for that affluent client if that's you guys might have. Moving on to the house and land space, but following similar theme, something that is ready to finance now, which is really cool. It wasn't too long ago that every house and land you had to get a client into was kind of 6, 9, 12 months away from title registration. It's opportunistic in the market right now because it is a bit of a slower market that we're now getting some nearly registered or basically imminently registered land. So people can actually go through their finance and get the formal approvals now. Probably one of my favorite listings we've got on the books right now is this particular one in Birkdale. For those of you who don't know, it's down in the sort of Bayside corridor down to the southeast of Brisbane CBD, a great existing suburb neighbourhood, going through a relative change and gentrification shift now with older Queenslanders getting renovated, median house price approaching $1 million there now. And it's not uncommon on the water side at Birkdale to see $2 million house sales. So we can start to see a real shift of families moving to this corridor over the last few years. And that's what's seen, like, I think it was the 12-month growth in the up to mid last year was nearly 20% in this suburb for the housing market. So really popular, absolutely pretty much zero land supply as well. It's built out. The only thing that can happen from here is maybe some small townhouse complexes, or if someone's lucky enough to amalgamate one massive big old home and cut it up like this developer's done here. So what we've got, as I said, ready for vals. Driveway to Battle Axe driveway is getting poured as we speak. Yesterday, we've got packages $873,000 to $890,000 on 450 square meters of land. And what's really cool about this one again as well is, the typical kind of rental return we're seeing in the market right now in Brisbane is actually poking around about now 4%. Like, not too long ago, Brisbane was about the 5% gross return story on most of the real estate there. And that 4% is the new 5%, basically, as we've got a bit of a yield compression going off the back of growth. Now, yields are obviously going to be increasing over the next few years, which is exciting. But where we can get house and land like this, boutique, infill, nearing completion, good size block, and we're able to get actually a 4.5% gross return, it's really quite rare in the market to be buying something of real, true owner-occupier ilk and be getting that great growth, great gross rental return. So great one, under 900,000, you're buying under the suburb median, 4.5% return, can finance now, and it should see their houses completing at the end of this year as well, which would be a great time to hit the market, the summer market, getting rentals in what should be a recovering market as the data is showing us at this point in time. Builder developer situation, and what we've got there, actually, just touching on the land prices, most of the land coming out in any kind of infill location around Brisbane now is poking around $1,500 a square meter. What we've actually got here is we've negotiated really well with the developer, and they bought really well, and they've got their experience in doing boutique infill, so they have some very good efficiencies to be able to offer a good price. But we're actually at just over $1,200 a square meter on the land here, which is really, really strong. Like, that is the same price as what you're seeing 30 kilometers out from Brisbane now. So it's a really compelling price point and story here. Mango Hill, going to the north side now. So about 25, 26 kilometers north of Brisbane. Most of you will probably know it. A 10-year sort of, was urban sprawl. It's now pretty much infill. Apart from the Cape Stone, the big master plan community out there, maybe having a few more land releases, there's really nothing more going on in the marketplace, which is great to see. So, there was a bit of a flood of land in 2014, 2015, 2016, and that's completely died off. So packages there, we've got 4-bedroom packages on 326 to 365 square meter blocks of land from 740,000. And those are looking to rent for over $600 a week. So you kind of get about a 4.2% gross return there as well. Now, boutique land subdivision, again, just 22 lots, which is really special. You can see a theme for what we're trying to do here with land. It's that kind of stuff that's best selling to owner occupiers in 10 years time for your clients. What's really cool is there's a funny dynamic in the Brisbane market at the moment where, land 20 kilometers, house and land 20 kilometers away is only a smidge more expensive than house and land 40 kilometers away because of the growth we've seen in the build prices and the land prices. And that, it used to be, if the point here is proximity to Brisbane CBD, that was the most expensive, and it went down as you got further away from the city. Now this axis has kind of gone like that a little bit. So we're doing $740,000 house and land here, whereas you've got for $750,000, you're getting not much more real estate going to Morayfield and Caboolture. So to come to this now infill location at this price point is really, really compelling. And as you can see, again, this one is pretty much complete. We are just waiting on titles to come through from council now. So we're expecting titles into this month. Construction's complete, ready for valuations. And we've got these packaged up with one of our main partners, Ausbuild, as well. So really good security in the builder that you're putting in front of clients, probably one of the biggest builder developer operators in Southeast Queensland at the moment. Bit more of a blue chip opportunity, Toowong. Great market, well-connected main arterial road networks, train stations, everything that you want to be able to show a client. Toowong's got it. This particular project is being undertaken by Azure Property Group, one of our main partners. In my opinion, probably producing some of the best real estate coming out of Brisbane as well, alongside your Arias and your Tabcorps. This particular project it's a nice small complex. It's overlooking the Toowong Memorial Park, which is great. It's got some absolutely cracking rooftop amenity, and it's just started construction too. So pre-sales are met, 5 points, the builder appointed, construction's underway. So that's a good conversation to help eliminate a little bit of risk and fear with clients at the moment. And we're looking like completion at the end of 2024. But again here, what we've got is the level of amenity and the quality here in this complex of just 90 apartments is really going to be very, very tough to do in 24, 25, 26 as build prices start to get even more chaotic and prices go up, and developers are going to be trying to do what they can to get pricing down to meet the needs of the marketplace and affordability. So it's going to be a bit of a rarity in the future, but we've got some great 3-bedroom, 2-bathroom, 1 cars and some 3-bed, 2-bath, 2 cars as well in there. Yeah, it's a great blue chip opportunity. There's a display suite people can go to, and just a very, very good brand orientated project to put in front of clients. So taking a look at New South Wales, there's not too many parts of New South Wales we do work in. We've seen the prices go pretty nuts, even in the regional markets. The yields have compressed. The real estate can have some funny terms, but Newcastle is a favorite of ours. I know Michael owns real estate in Newcastle. I own 2 properties in Newcastle, never had a day's vacancy, always gone up in value, even at the last correction with the lead up to the election and APRA stuff in 2018. So it's a very, very stable, very, very good market. We love doing work there. We've got right now working with a particular developer we've worked with for about 10 years, locally based builder developer, a complex of apartments. There's a range of 3-bedroom townhouses remaining. And at this point in time, there's one particular 2-bedroom unit that I really like as well for investors there. So the 2-bedroom unit in question is 670,000. Your rentals there are 600 plus a week. So you're poking around 4.5% gross returns. And the 3-bedroom townhouses starting from 875 up to 995 for 3-bedroom townhouses. So really, really nice designs, great finishes. Where we're located, you might not be familiar with Newcastle. We've got some great information to share with you about the general macro fundamentals of Newcastle and why it's a great place to invest. This particular suburb, this is just 5 kilometres inland from the CBD and the harbour area. Walk to a train station, walk to Maitland Road, which is littered with Woolworths, cool pubs, trendy shops, cafes, everything like that. The median house price here is now $1 million in this suburb. What you've had is all the shacks and fibros over the last 5 years being bought by locals, renovated and starting to sell for up to like $1.5 million. So that gentrification story is fantastic. Absolutely zero supply to this area. Nothing. This project is pretty much it. It's all housing, and it would be near impossible to be buying any big amalgamated blocks right now and produce anything that's going to stack. So really limited in its supply. Now, Newcastle's gone through a huge amount of change, and when you actually go to areas in proximity to the city, 2-bed, 2-bath, 1-car apartments and new projects there now are up to like $1.2 million. So the value here and the benchmarking that you can get going just 5Ks out in a really good, just, suburban infill strategy story is really quite strong. And with those subsequent rental returns, really positive too. So the site has been cleared. That's from late last year, that shot. They're about to pour slab the end of this month. It's a quick build, about 12 months. There's no digging. It's just walk up because it's only 2 stories. So very, very boutique, 34 apartments and 12 townhouses. So really good one to look at for people. Maybe they're looking to diversify out of Melbourne if they've got something already, or if they've got something in Brisbane. This is a great next market to take a look at. The same developer, we've got a project of just 20 townhouses in a great suburb called Fletcher, which is, this is just a few minutes drive away from like the massive John Hunter Hospital, which is always undergoing big renovations and extensions. Just a few minutes drive away from the Callahan Newcastle University campus as well. Fletcher this is actually the neighbouring suburbs where I own my properties, so I know it quite well. Big fan. It was about 10 years ago that some big players like Stocklist and Mirvac and some other more local big developers, McCloy Group, got into these locations and did big sprawling communities. Now those sprawling communities are done. They're done. There's no more land. There's no more supply. What was a $550,000 house and land package 8 years ago is now selling for $1 million, $1.2 million, pending the size. So it's gone through that cycle now, and it's got to a mature owner-occupier market. So townhouses here, we're coming in at a really, really good price point. And I think this is the importance of this kind of real estate, because as we come to affordability issues, whether we like it or not, it's always going to be a problem in the future. And this, go to a great leafy part of town in these completely established built out suburbs and buy real estate that's $500,000 under the housing price. It's always going to have very, very good pressure on this real estate. So just down the road is shopping centres. Across the road from this project is a massive childcare centre. And in the other direction, you're just looking at pure, beautiful bushland. And in the other direction, you're just looking at $1.2 million houses. So really, really just nice, nothing wrong with it in terms of sending a client there, anything like that. It's a great little boutique block of 20. You get some 3-bedroom townhouses there for $670 to $720. I recently just went through a refinance on my properties. I've got 2 freehold 3-bedroom properties. I got, albeit they were desktop valves, mine are 7 years old now and inferior in size and finish to what these will be. And they just got valuations on them at $680,000 to $750,000. And that's in an inferior location as well. As these like, it's like these have gone through this beautiful change and all nice new housing. Where I am is kind of still a little bit old housing going through changes. So this would be considered superior in this Fletcher location. So really interesting to see what the valuers are putting on here. So you can get new for $670,000 to $720,000. And as you can see from the photo, it's well and truly under construction too. So finishing up this calendar year, Q3, get your property rented, done, settled, and happy client before Christmas this year. One of my favorite projects at the moment, looking at the ACT. I know it's been on everyone's lips for the last few years, really, really popular market. I have to say some of our biggest gains for our clients we've had here in the last few years, outside of like Brisbane housing and some blue chip units in Brisbane, has been in Canberra. Like we were selling 2-bedroom apartments in a range of different locations around Canberra. And some of the uplift is staggering, like 25% over a 2-year period, ended up with 6+% gross rental returns, really, really happy clients. So it's definitely a market we encourage. And we still think there's some very, very good growth to be had here and still delivering really strong 5+% gross rental returns. So this particular project, this is with the same developer we've done a lot of work with called Hindmarsh Group. They're a builder developer. They're a very long-standing group. Home is Canberra for these guys and very well regarded. They're not like Geocon. They're focused on a little bit more quality, better size, better amenity of their projects. They don't scream their name from a rooftop and spend $1 million on a website, to look the bee's knees. They are just out there delivering. So their last project we actually settled with these guys before Christmas. We had 1-bedroom units coming in with finance valuations, which is very uncommon, 20% gains on the finance valuations with this developer on their 1-bedroom properties, and everyone's looking at 6% gross returns. Some commentary from our contracts managers. Our contracts managers, our combined companies sell about 500 properties a year. Our contracts managers' feedback was that they've never seen anything like the delivery of these apartments. We always get K-spec to do our defects inspections. They nearly had no defects to go back and argue on. So we're very, very bullish with this developer and doing further work with them. Just a pleasure to work with. Now, what we've got is a 3-part building project in the suburb of Phillip, referenced as the Woden precinct. So the project is called Woden Green. It's just over 400 apartments, about 130 odd apartments in each one of those buildings you can see there in the site plan. And it doesn't really have that tower feeling or anything like that, which is great. And as you can see, there's absolutely gorgeous, expansive gardens between all those buildings. And there's about 40-meter gaps between any of those buildings. So you can really safely get a unit looking in any direction, because there's a huge gap and you're looking over beautiful gardens. And from most areas, you'll just be able to turn your head left and right and have expansive district views out to Canberra or to the mountains as well, as you can see in the render image there. So it's got a huge amount of amenity in there, from gymnasiums, beautiful pool areas, garden areas, like a dog play area and stuff like that. But basically what I love about this one is what we've got is some of the best value you can kind of get now. Like, to go buy 1-bedroom apartments in Brisbane and Melbourne, it's $500,000 plus, and you're getting 50 square meters plus a balcony. So what we've got here is from $450,000 to $470,000, you can get 1 bed, 1 bath, 1 car plus storage apartments, but the sizes are like 60 square meters plus balcony. So you can see that example I've put in there. That apartment there is $470,000, 60 internal with an 8 square meter balcony, and it actually has that massive storage room there as well, which, you know, as we know, that's just so important. Now that's set to rent for over 5% gross as well. So it's a really compelling project, really compelling story. So you can read some of the dot points there. If you want some more information on it, we've got all the property investment reports to send across to you. But basically, this is a huge, this one in Birkdale, some of my favorites. Yeah, this is a short stroll to where the new light rail's being built. It's a short stroll to massive shopping centre, short stroll to heaps of government workplace offices as well. So there's heaps of jobs around, and it is a stroll to the hospital as well. The largest hospital, 25 buildings there. So huge employment around. These things should rent their heads off. So construction starting this month, completion, I'd say late 24, early 2025, which I think is going to be a much better climate for people to be settling their real estate, with rates probably a bit lower, some better secondhand market sales in a bit more of an active market. And the beauty here is as well, 5% deposits. So you got clients being able to get in here with as little as $23,000. There's of course another bunch of benefits to ACT that has the absolute lowest stamp duty of all our states. And actually the stamp duty is tax deductible in year one from settlement as well. So some really cool benefits to looking at this particular project. Now jumping down to Victoria, just about 10 more minutes to go, guys. The first one, everyone's chasing a price point, and a lot of feedback seems to be that kind of $550,000 to $750,000 price point is where the meat and potatoes of real estate is at the moment, with interest rates the way they are. We've identified this Point Cook precinct as a really, really great opportunity for any investor to look at. It's a great diversification play if someone already owns in Brisbane or anywhere else. But basically, it's 25 kilometers southwest of Melbourne CBD. Now, this is a growth corridor going through a huge, huge amount of expansion. You know, 10 years ago it started, it was the new urban sprawl, but similar to Mango Hill, that's not urban sprawl anymore. It's pretty much built out. This is one of the last available plots of land in Mango Hill before they're now starting to go further out at Werribee, Wyndham Vale, and all the way down to Geelong. So when you look at prices in Geelong and the outskirts of Geelong, where it's just a paddock as far as you can see, it's not too much cheaper than coming back here where there's extensive existing neighborhoods and shopping centers and schools and, you know, owner-occupier precincts established for just that smidge more. So it makes a lot more sense to come and be looking at these types of properties. But for 670,000 to 710, with one of our main partners, we've got exclusive hold here. This is with Creation, along the East Coast, one of the biggest sort of terrace style producers in Australia at the moment. Great group to work with. 669, 710,000. You should see up to about 4% gross returns here as well. So it's pretty good for Melbourne. And we've got titles on this land happening around about August, September. So you'll probably end up with a build finishing mid 2024. Construction's already well underway on the land. And I think I always love to show when I'm talking to a client, I reference, you know, Melbourne's set to be our biggest capital city in terms of population. It's going to be definitely, when the tap really does turn back on for international migration, getting the most pressure out of anywhere like it was the years prior to COVID. Now, consider that with relation to what the property prices are, there's a pretty clear and evident story of why we're going to get some continued strong capital growth in this market. So 25K's out, it's that price point. And when you compare this to something, many of you might not know Sydney, but Sydney, you've got to go 70 kilometres out now to some very extensive areas out the depths of Northwest, past, you know, Schofields or past Campbelltown and stuff like that on your way to Wollongong. And this same product, 200 square metres of land and a 4-bedroom, 2-story, is about $1.2 million. So when you look at that sort of value orientation, it's really, really attractive for an investor to understand. Something cool, another cool fact is during all this hullabaloo in the last 9 months with rates and stuff like that, we've actually had rental appraisals updated with our team. They're now $30 a week, up more than they were at the end of last year, given what's going on. And actually, this market over the last quarter, the median house price has gone up. So very, very stable market, getting all the pressures we want to see. So a really cool product, that price point, and yeah, nice 4-bedroom, good value property. For some completed stuff, over to the eastern side, northeast of Melbourne CBD in Doncaster East, popular community, really popular in the Asian community, and you've got some completed apartments there from 560 to about 650,000. Really good level of finishes, wooden flooring, nice Miele appliances and stuff like that, ducted air conditioning, and they've never been lived in. This is residual developer stock again. The developer's selling them down. You can see from the image there, really nice finishes, high ceilings, ducted aircon, you know, beautiful the sort of patterned marble splashback and stuff. Developer residual stock, so you get full depreciation here. And we've got 4 to 4.5% gross rental returns. We've done a few test valuations as well on the 2 bedrooms, and they've come in on the $1.02. So you can get a nice finance clause on these anyway, but there's a bit of confidence going into that product. For off the plan, we've got one in Maribyrnong. Maribyrnong is a great emerging part of Melbourne to the northwest, just past areas like Footscray, inland from Ivanhoe, going through a huge amount of change and gentrification, but very much an existing infill area. You can see there the site where it's listed as Agora. Really, really cool site, probably one of the best ones we've worked on in a few years down in Melbourne. You just a hop, skip and a jump. That Pipe Makers Park is beautiful. You can take the bridge across to the Riverside Sports and Golf Set Recreation area. And one of the big draw cards here is it's literally across the road from High Point Shopping Centre, which is the 2nd largest shopping centre in Victoria. It gets tens of millions of visitors every single year. So for people who are buying in this particular complex, absolutely everything is at your doorstep. You know, Victoria University, big uni, going through change and updating as well. Footscray Hospital's undergoing a $2 to $3 billion upgrade right now, so it'd be one of the biggest hospital precincts in Melbourne. So you've got jobs everywhere, education everywhere, lifestyle everywhere, and you know, general connectivity and transport's right at your fingertips as well. So this is a top tier developer we've done work with for about 10 years. They produce some very, very good real estate, very safe to work with. The construction will be starting late mid this year, so finish up probably late, I'd say mid 25 probably is when it's going to finish up this one. You've got 1 bedrooms from 550, 1+ studies are high fives, and then you've got 2 bedroom units from like 695 to sort of 800 pending the size, but you can get a really good 75 square meter 2-bedder plus balcony for sort of $720,000 in here. Again, you know, thinking we're 6-7 Ks from Melbourne CBD, relate that price point even to Brisbane now, or relate that price point to Sydney, you'll see that it's a freaking good value proposition while looking at Melbourne, understanding the 10-year potential of what Melbourne's going to be as far as a capital global city. The amenity in this project is absolutely gobsmacking as well, with like co-working spaces, and it's really future-proof real estate. So definitely something, so anyone who's looking at Melbourne for a strategy point of view, a great project to put in front of them. For some more completed, we've got Hawthorn East, 4 kilometres directly east of Melbourne CBD. This is a really cool project. It was a UDIA award-winning project. It's about 1.5 years old now. Same story, residual developer stock being sold off gradually now. Bit of a slower market, so we've actually squeezed them for price drops now as well, which is really cool. So 2-bed, 2-bath, 1-car, lovely apartments, as you can see, 740 to 780,000. Then a 5% price drop on that. Now, something really cool here too is our rental management team have been getting anywhere from 4.2 to 4.4% gross rental returns, which is now kind of on par with what we're seeing in most blue chip stuff in Brisbane. So really good return for Melbourne. And I think we've done about 25 sales in here. And I think we had about 23 or 24 successful vals out of those 25. And anyone who did have a bad val just got another one and it came in on the dollar. So great confidence going into this project as well. Ready to settle. Something really cool little fact, the median house price in the suburbs, $2.4 million. So that a lot of people often reference Melbourne for its value with the units because of that huge divide we've got with housing and unit prices. And ultimately what is going to take place is housing stifled because of affordability, pressure down on the more affordable end of the market, and the unit prices grow. We've seen it time and time again. It's just a converging and expanding sort of pattern on the growth chart, and that's what we see having really good potential here. So it's moments from great transport, really good eat streets, everything 4 kilometers east of Melbourne CBD. Those prices explains itself. So taking a bit of a look ahead, in Albany Creek in Brisbane, we've got a 34 townhouse project launching in about April, May. We'll have some initial information, hopefully like end of March, to be able to give to some people who are interested to take a look so you can start warming people up. We're using one of our main partners, Creation Homes, as the builder there, but you'll have 4-bed, 2-bath, 2-car strata title townhouses from about 785,000 to about 815,000. Rentals there in the high 600s, so you're getting about a 4.5% gross rental return. And yeah, just really, really nice, like open, spacious grassland amenity area, pool area and stuff like that. But a great market just 14, 15 kilometers north of Brisbane CBD. So very much infill style boutique townhouse complex, which I'm sure is going to be really, really popular. So that's coming up soon. The next one as well in Bundamba, top tier Brisbane based townhouse specialty developer. We've got a complex of apartments, townhouses with them. So you'll get 3+ media room. So it's actually like a 4-bedder, 2-bath, 2-car, really beautiful designer terraces, great amenity like a pool and landscape gardens and stuff. It's unbelievable. 550,000. They're coming up. We'll be launching them about April, May, initial info in May. But that price point we know is going to be really, really popular with people. We've negotiated some great fees there as well. So it's very going to be worthwhile for everyone to have a play at. But we're looking at 4.5 to 5% gross rental returns there as well. So great price point, and that value product that you're getting is really cool. It would be very suitable for SMSF people and a bit more price point sensitive clients that we all have at the moment. To Tingalpa, this is a bit more for the astute investor with the kind of $1 million price point ability to play. We've got a 21 land lot subdivision in Tingalpa, which is just 9 kilometers east of Brisbane CBD. That'll be launching late March, early April. DA approved, construction on the land starting late April, May. So titles will be happening before the end of the year and settling. Basically, it's a bit more of a blue chip offering, very, very boutique. And just this kind of property is where we've seen over the last few years the most staggering amount of growth in this market, and where we feel that it's going to continue to have that. Like if you take a look at Melbourne and take a look at Sydney, 9 kilometers out, you know, what would it cost you to buy 400 square meters and build a nice 4-bedroom home? Squillions are probably 3 to 4 times as much as what these are. So packages in here will be like 950 to 1.1, pending the build and land size. And the rental market is super, super tight. So it's just a great boutique, bit more of a blue chip opportunity for any clients that you have who really want to focus on that housing strategy. For me, that's probably one of my top strategies in the country, Brisbane housing, infill boutique housing for long-term hold. I just think that the value that you can get there is just crazy. A similar sort of story just to the north, boutique infill subdivision of just 9 lots in McDowell. Many of you might know McDowell, great suburb, you know, that leafy quadrant just north of Brisbane, so close to everything. We're going to have packages there. Construction on this one starting in about March. Packages should be ready late March. And we've got prices. You'll see prices there. If you bought 400 square meters of land and did a nice 200 square meter build with high 2.7 ceilings, ducted and all that sort of stuff, you're probably looking at like 1.175 to 1.2 for packages here in McDowell, 9 kilometers from our city. So really exciting marketplace. You know, all the tick boxes we want to see, like if you go and look at vacancy, it's dead low. You go and look at houses for rent right now. An absolute piece of crap's $800 a week. So you can expect to do a blue chip, long-term hold house for 1.2 that's going to rent for $1,000 a week at completion. So really, really cool kind of product to have in the portfolio. So that one's coming through in just a short while as well. With one of our main partners, it's ARIA Property Group. Their next exciting iteration is coming through in about April in West End. Many of you might know their award-winning project called Treehouse in West End, which overlooks the park, Jubilee Park, I think it is. The site next door, we've got another lovely boutique project. We've only got 60, 70 apartments in there from memory. And it's very much more of a higher price point, blue chip offering, top most awarded developer in Australia kind of thing. But there's definitely some really good real estate to be had there. You can expect all the normal sort of stuff from ARIA. Absolutely beautiful rooftop, stunning finishes and amenity. No doubt will end up being a UDIA award-winning brand, brand-orientated complex. Some of the projects that we've sold dozens of apartments with ARIA Property Group, Riviere, Trellis and Upper House, which are finishing this year. 2-bedroom units are making about 20% gains, and we've got 3-bedroom units set to make up to 40 and 50% gains for our investor clients who bought off the plan 2.5 years ago. So really, really impressive growth stats and quality like no other in the market. So for those of you who had that client playing at that kind of realm, who want something like this, we can organize tours and all that sort of stuff. It's beautiful property to work on. But that's it for me. We've gone just at that 45-minute mark. So thank you guys so much for sticking around. But look, if we haven't got a really functional working relationship going just now, I'd love to connect with you and chat a bit further, get you signed up, get you on our mailing list so you can see our stock releases and feature deals and stuff like that, and get further invites to these kinds of webinars once a month. So yeah, please reach out if you're interested in any of those projects you saw today to myself or Michael. Let us know if you want more details. We can get you the property investment report. If you prefer to just get the docs yourself, we also share with you just a Google Drive link, which has got everything in it. So you can pull pieces out to send to clients, whatever you like or prefer. And look, let us know which projects are of interest, because some of them have got tours available, and let's get you signed up. So just to reiterate as well, what we do is nearly every day, there'll be some communication to our list of sales partners, which will be feature deals, invites to webinar. But every single Wednesday, we send out a Stocklist email that goes out. It doesn't have the availability list in it, but it just overviews the projects, a couple of main dot points, a sample plan, some imagery. And then what you do is you'll just reply email and say, hey, Brennan, hey, Michael, interested in the Lutwich one, please get me more details. And we'll be able to get you everything you possibly need for them from there. But yeah, that's it for me today. Thank you guys so much for coming along. I look forward to chatting with you soon, and otherwise catching up with you next month. Hope you like the deals we've got. We really look forward to helping you and your clients secure some amazing real estate. So please reach out. And that's it for me today.